So today we are going to briefly cover market tide, unusual options, and the options AI. So when we released market tide, I think it's a couple months ago now, I did a quick breakdown in the education channel, but we never got around to making a full video on what we're reading and kind of the concept behind it and how we can leverage that in our trading. There's a lot of lines and whatever you want to call this little bottom section, a little volume graph. But overall, the idea behind market tide is very simple. So when people place options orders, right, there's only three places that that order can execute, right? You can be at the mark, so the middle, you could be at or below the bid, or at or above the ask, right? There's a couple of things that we as traders tend to do with trades that are at the ask or below or at the bid or below. And we make certain assumptions. So because we don't know the intent of a trader, right? The best thing that we can do is kind of determine if somebody is buying or selling something based on the execution in relation to the bid and the ask, right? So if something is executing on the bid, we lean to it being a sell. If something executes at the ask, we lean to it being a buy. And that's really all that market tide is doing, right? So market tide can take any ticker that has options contracts, and all it's doing is it's mapping out buys and sells according to the bid and ask in relation to those contracts, right? So when something is bought, right, the line goes up. Super, super simple to understand. So in this instance, right, we have calls being bought, so the green goes up, calls bought, and we have puts being sold, right? So that's the red. I have my refresh set really high on tech demo, sorry. So what does that really tell us, right? So a sold put, right? So somebody selling it, there's two possibilities, right? They could be selling it to take a profit, or they could be selling it to open a new position. So either one of those, we tend to assume to be bullish, right? Or they could buy put, right? So it's either closing out a sold position or opening a new position, which in case the red would go up. Sorry, I have to change that refresh. And in that instance, that would be bearish, right? So red over the line, right? Over the zero line, $0 notational value. Bullish, or sorry, bearish, red under the line, bullish, right? And the opposite goes for calls, right? So when somebody buys a call and they're getting into a long position, that is bullish, right? The green line goes up. And when they start selling those calls, the green line goes down, which is bearish, right? Now, market tide, and the thing that we do that some other people don't is we take the notational value of the contracts, so the total dollar figure of the contracts that are being bought and sold and traded, and we kind of turn that into a bullish or bearish indicator, right? So in situations where a lot of calls are being bought or a lot of puts are being sold, you'll see in this bottom section, right, which is the aggregate value of the contracts, that we start to increase, right? Green in this instance means that we are leaning more towards the bullish side. Red, which we don't really have on this day. What is this? This is today. Red is bearish, right? So you can see at the start of the day, puts started to get sold and calls started to get bought, right? Which meant that we were in a more bullish scenario. We bottomed out and then we started to push up, right? In other days, so we can just get a good example here. I think, let's say the 15th. We can see that the opposite is true. On days where puts are being bought and calls are being sold, the aggregate value is in the negative, which indicates that we are in more of a bearish stance in relation to the contract value being sold. So that is one way that we can start to visualize the market. The thing is, all of these contracts, right? There are different expirations for these. So, a put being bought today could be for a month from now, 2 months from now, 3 months from now, a year from now, 2 years from now, right? We know that they're being bought, but there's no definitive guideline here on whether or not those are going to expire today. So we were testing a situation, which we can see here with SPXW. So SPX, these are the same day expirations where you can actually select just the day's trades for today and get kind of a different visualization on the market. All right, let's go to today and just see what we had, even though OPEX is probably a little janky. So yeah, you can see on the 0 DTE trades, a lot of puts were being bought. A lot of calls were being bought at the same time, but puts still kind of outweighed it, right? There was no divergence like we see here, where puts are bought and calls are sold. They moved in line, and you know, the day was pretty choppy, right? There was no clear indication. When you see a lot of puts being bought and calls being sold, and you see this clear divergence, it's a little bit easier to rely on market tide solely, right? It's never going to be an exact science with something like this, especially when you can't see all of the different expirations that are mixed in here. But a good rule of thumb is if you start to see these lines diverge, right, move away from each other, especially at the same time, that you can trust that we're in this case, sorry, my cat is in my face, a little bit more of a bearish scenario. Oh, one sec. So we can see something similar to that near the end of the day today, right? So today was OPEX. This is the 17th of April. And all day we moved more or less in line, right? Maybe not the exact same amount, but as puts moved up, bot calls also moved up, right? Up until a certain point. So once we get to around 11:05 today, so that's going to be 2, 11, 12, 1, 2, 2 East Coast time. You can see that puts start to move up pretty rapidly, right? This big jump up here. So puts moved up a notational value from 19 to 28 million, right? So about a $10 million order was placed right around here. And this is a 0 DTE order. But calls did not react the same way. In all these other instances, when puts moved up, calls moved up. Puts moved up, calls moved up. Here, we have a massive order, one of the biggest orders of the day for a single minute, and calls did not react, right? Pushing us even further into bullish territory, but also getting as close to a divergence as we would on the day, right? So we didn't necessarily move away from each other, but one made a big jump and the other did not react, right? And then you can see how that played out at the end of the day. So puts kept getting bought and call value, right here on this jump, call value is 8.4 million, moved up to 9, moved back to 8. Calls stayed relatively flat while puts kind of slowly climbed up. And then you can see at the end of the day here that, we definitely played out in a more bullish scenario after there's a little bit of lag on the call side, right? So moving in tandem, stayed pretty steady, stayed pretty choppy. As soon as we started to kind of unlink from each other, right? Where calls weren't moving the same way puts were. We initiated that flush, I think at the top here, yeah, 53.27-ish, if you don't include wicks, all the way back down to our opening price. A nice little 50-point move there, right from this divergence. So two things that we can look for just right off the bat, do we see a divergence, right? Even in this divergence, you can see that these move in sync on these larger moves. Or do we see one start to move and the other not react, right? These are two kind of basic situations that we can use to help gauge which direction the market is going to move from there. But what is like the composition of this trade, right? So at 11:06, 11:07, we moved up $10 million in puts. You can't really see that from the market tide quite yet, but you can see that in the unusual options if I can type. So how do we use unusual options and market tide together to get a better understanding of what the market is, right? We know that puts were bought. We know that no calls were really being bought at this time. What is this order? And can we dive a little bit deeper and see if there is something that we could actually do with this? So we're going to go over to, that was around 11, 12, 1, 208. Let's make sure we're on the right day. Scroll down, show me big orders. So around 208, do I have filters on? Ah, that's why. We're gonna have to go back a couple pages here. Lots of options, orders all over the place. And just wait because you will not have to scroll like this ever again once we put these filters out. So around 208, so that's this order. 1.7 million. This is the mass, yeah, 208, 209. So this is a pretty massive multi-leg order that came in, right? So a lot of these are sells, some of them are buy, but these aren't zero DT. Where's zero DT? Give me that. There we go. That's not even the order we're looking for. Pardon my mess. Sorry, this 208. There we go. It's one of these. So this is part of it. We have 5850 put at ask, right? So this is closing out. So it looks like they sold the put to open earlier on, and then an hour later they bought it back to close. Damn, contracts are expensive. Deep, deep in the money put, right? So they sold the deep in the money put, probably collected some premium, moved that around, but it's a multi-leg order. So normally you would need to go through and find the other legs that are a piece of this multi-leg order, right? So with the new options AI system, it takes care of all of that for you. You just click the little sparkle here. And what this does, it'll pull anything, if it's a single leg order or a multi-leg order, and it's going to break down the trade here, right? So we can see that both of these, it bought 58.50 and it sold April 24th, 58.50 put, right? So they closed one, they closed at 58.50 for today, and then they bought the put for what is that, next week? 2 weeks from now? No, that's next Friday's put. So they rolled into another put deep in the money. And then you can see we break it down. So based off the contract, because it was a zero DTE, and we were able to see that it was kind of just a roll position. So they had all this money in 58.50 put, right? They bought that. My cat is driving me nuts. She's attacking my mouse. They bought 58.50 put somewhere. Ow. Somewhere in this area, probably somewhere around here, right? It could have been two orders. And then they sold that put, or they bought that put back, closed the position, rolled into the April 24th 58.50 put, and then the market started to drop, right? So this is not the best example of options orders because sometimes rolls are a little bit confusing. But previously, if we were looking at zero DTE contracts and it had a multi-leg, we would have to go through and find the matching multi-leg order to kind of compute it. And now it's going to do it all for us. So we can very easily see, oh, they rolled this into next Friday, right? So they sold that put. So what does that mean is the next question because they just sold $7 million in that put. So they're collecting premium for something. That wouldn't have a direct relation on this order specifically. So that is exciting. And then that just slowly started to flush. But call divergence, still bullish, minor push up on all trades. This is kind of what we're looking for, right? So on OPEX, we tend to have very choppy moves. The range might still be relatively large. Yeah, it looked like a calendar spread. I think that that's what the AI said, it was a calendar spread too. Where did we go? Yeah. So it says potential calendar spread. Yeah, I mean that's the thing with this, right? So the crazy thing about the options AI system is the ability to classify some of these more advanced strategies. Now, this is only two orders in a multi-leg. I'm sure I can find something. This is not one. Let's go out of zero DT. Two orders is relatively easy to compute if you understand, there's 30 or 40 different advanced options strategies that use multi-leg. If you know that, you're probably good. But there was that order that I had posted. This looks like it could be one. Yesterday or the day before, and it was like 15 individual legs to an order. And I don't care how good you are at options, like you're not computing that in your head. You're gonna have to map it all out. You're gonna have to chart it and you're gonna have to go through it. So this order, right? This is a 5 leg trade. And it took about what, 7 seconds. Automatically breaks it down. It's gonna classify it as potentially, diagonal put spread with a covered call. It's going to break down what it is. It's going to break down the long term. You have your PL chart, right? So we understand where spot was at execution, where the break even point is. Easy peasy. Like for individual trades, this might be overkill because if you see an individual trade, you're gonna be like, oh, it's a naked call or a naked put every single time, no question. But when you start getting into 3 orders, 4 orders, 10, 15 orders, whatever, 20 orders. I've seen some pretty crazy multi-legs. Like there's no possible way without you entering that into some other sort of calculator that you're going to be able to get close to what the strategy is, right? And this is eliminating all of that, telling you where it needs to go, and that's where it becomes important, right? So at expiration for this trade to just break even, right? We have to be just over 4,900, sorry, 4,990, and they're already in profit because there was a sold leg to this. Yeah, the covered call side. Sold for premium, right? So sold the puts, can't go under 5,000, right? If it goes under 5,000, these will execute in the money and bought out of the money calls, 53.50, which is very bearish or bullish, very, very bullish, right? Stay above that, they make money off the premium, right? Even if it closes at 5,001, they still collect all that premium. But if it closes at, 4,999.99, they're going to start losing money because it's in the money. So this is super, super bullish. This has 33 days till expiration. What's the rest of that? Yeah, May 19th, and then the puts were sold uh about a month or a couple weeks out, 3 weeks out, and then about a month out. So that's interesting. So like being able to compute that and seeing these large orders come through on something like Market Tide, right? Today is not the best example. We barely cracked a no, that was 2 days ago. We barely cracked, $500,000 total. For those that would read through the education previously, the billion mark for SPX tends to be right around the sweet spot for where moves start to happen. Once we get around to that billion area, it doesn't usually hold for too long before a move happens. The lower the volume or the lower the value on the options contracts, the less, the less inclined the market is going to be to move because of the contracts, right? That means if you see low values, there's very little positioning going on. We want to see large spikes, right? Large spikes indicate that the big boys are getting into positions. They're preparing for something, right? Before the market moves, options contracts are bought because the market moving is what gives those more value. So using market tide, we have a better way to see when large spikes happen, when large amounts of money come in, and then we can kind of dive a little bit deeper in the unusual option system and the options AI to see like what their plan is, where they're trying to go, and where the market needs to go for them to make money. We haven't seen it this week, but I know last week and the week before, there's orders coming in for, I think there was one that was 500,000 was the one that I had posted where they needed to get up over 5,400, right? That one had a while till expiration. Let me pull it up. That order, where is it? Expires 9/19. So there's quite a few days until that one needs to come into effect. But if you remember, that's 54.50. Sorry, I can't read numbers. They need 54.50, and that's $500,000, right? Or sorry, $500 million. That's a big position. The larger the position, the more inclined I would be to look at it, right? Like I don't care about an individual option order for, $20,000, but you see a multi-leg that comes in at $500 million, like that's somebody playing with some serious money. Those people don't want to lose. So I think that this is just a quick and dirty way to start kind of implementing market tide, right? We can look for divergences. We can see calls being bought, puts being sold, or the opposite. We can look for Where was that one? Zero DTE. We can look for, non-relational moves, right? Where things were coupled and then they uncouple, and then kind of base our assumptions around that. If you see things moving in tandem perfectly, like right around here, we were pretty choppy, right? We kind of floated around and hovered around 52.85. That would kind of be the pivot point here. And then we finally started to retest highs, puts got bought, right? So there's that roll. And then we started to move down. So like we uncoupled here, big move. Before that, we were pretty tight. The tighter it got, look at how choppy it was in there, right? When they were getting really close to each other. And then finally, puts took over, calls didn't move at all, started to move down. So just a couple of things to look at when we're kind of dealing with market tide. It's always, this is all data, right? So this is every single options contract for every single ticker that has options contracts. So you can use this on any single ticker you want. For now, only SPXW has the zero DTE trades. We're going to be rolling out that option for other tickers probably in the next couple of weeks. I'd love to see a Tesla or Nvidia or an Amazon on a Friday and see what orders are coming in, see how people are positioning or trying to degen, on that zero DTE contract. Yeah, so simple. Not a it looks like a very complicated chart, but really it's just telling you where is the money. Are they going into calls or puts? Are those being bought or sold? And how are they in relation to the other? Like, is it more calls than puts, more puts than calls? Is it more bias? Just giving you just another way to kind of see where the positioning is for the day. And then you can dive a step further going into the historical on the contracts. When you see those large moves, kind of decide, oh well, this is something that needs to execute soon, so it'll probably have an effect on the market shorter or shortly, versus something that's a year out, and you could be like, well, they're positioning, but they have 6 months for it to pan out, so it might not actually impact the market today. And once we roll out the options AI system, it's going to help you decode all of these, like these massive multi-leg orders. We just got another one here. Let's pull this. Let's just see what we got. 4 days till expiration on this. This is 6 legs. The more orders in these multi-legs, the longer it's going to take to compute, just a heads up. So these are all bought puts, right? We have a pretty big notational value. Bought puts, no sold calls, no sold puts, all April 20 Expo. They want, and they're all the same order, right? It was just broken up. 52.75. So this needs to start moving down. And this is how much money, let's say? Two, three, four. This is like 1.5 million, 2 million. So not a massive order, but still something to watch. Like these people are totally, totally naked here unless this is the hedge. Another person saying it's going to go down. So I think that this is going to help us understand all these options contracts a little bit faster. There's a ton of data when we're dealing with this, right? Like even just today, 1,600, almost 1,700 individual large options orders. So this is orders over or 10,000, $10,000 in value. Making it easier and faster and quicker is the name of the game when you're dealing with something like this. Because if you're looking for one individual order out of 1,700, it's like a needle in a haystack. Which kind of brings me to our last little update that I've been working on over the end of this week, which is updating our filter system for the unusual options. So people have asked for this for a while, and I finally got a way to do it. As it stands now, you kind of have to hover over each individual thing. You got to click filter. You have to select an operator. It's kind of cumbersome and it's not very intuitive. And then you break this sometimes. So the way that we have it set up here was never the game plan, right? It was never what we wanted it to look like at the very end. So I finally got some time to work through the new system, and rather than selecting your filters, your strike, whatever, and having to have that tiny itty bitty little window, right? Dealing with that over here and remove all. We've built it in to the sidebar, excuse me. So now, everything all in one place. You have the ability to visualize what you can actually filter through. Um, It's just a better system, right? It's easier to use. It's anchored inside of the pre-existing settings menu where we're selecting the trading day anyway. You can apply, we can clear all the filters. So if we're going through, hey, I don't want anything. Hey, I want puts. And then we can go, I want the volume greater than OI. I want it to be out of the money and no multi-leg, right? So we can select that, we'd apply. That's going to show up here. It's going to be way faster to get through trades. When I showed you over here, it's like, oh, I wanted to find the trade that happened at, 11. I had to go through and scroll through all this stuff. I had to go 4 pages over. It's not fast. We'll be able to do that right in here, right? So we're going to be able to select the trade times. We can select the expo dates. We can select, out of the money, in the money, multi-leg, single leg, whatever today's trade. So zero DTE, done, right? This is going to be significantly faster. It took me like what, a full minute to find that one contract just because of the time. I had to go and scroll through and I didn't have it that it was zero DTE. Nah, we're not doing that anymore. We're moving into the future. So this system is going to be so much faster. It's easier. It's going to be scalable for mobile. The other one was just a pain. It's going to make life easier. Everything is aimed to make life easier, right? The options AI, the historical data, new filters, tools that are easy to understand, like market tide. We don't want to create complex data to make trading more difficult. We want to take the complex data and make it easier to understand. We want to make it easier to access and faster to use. And that's what we're doing here. And then, clear everything, done. Easy peasy. And I see that there's a couple of questions here. So somebody asked if it is recorded. Yes, this is being recorded. So Charlie asked, if the red line goes negative, does that mean they're exiting their put position? So no. Wait, if you're talking about the put line, it does not always mean that they're exiting the put position, right? So in any sort of options trade, right, whether it's a call or a put, you always have the option to either buy that or sell it, right? So you can sell to open a new position, or you can buy to open a new position, or you can sell to close the position, or vice versa, right? So just because the line is going down does not necessarily mean that they're exiting their trade. That's where you go to the unusual options and see if it, some trade that existed previously is being closed out. The red down could be them selling puts, right? So short selling puts to or like a naked sell, right? Which is very bullish, right? So if I'm selling a put to open the position, that means that I do not expect the market to go under that contract, right? I don't want that contract to be in the money because I'm collecting all of the value of the contract up front. If it expires out of the money, I make all that money, right? That's all mine, all that credit. So it's not necessarily a sell, right? They're not necessarily closing their position. Red line down or green line down could be a sell to open for either. But you won't know that specifically from the market tide side. That's where you go, oh, red line down, puts are being sold. And then the next question is that a sell to open or is that a sell to close? In which case you go in, you find the contract for that time, right? Which will be so much easier with the new filter system. It'd be like, oh, that happened at 7:20. You'll go in, you'll select the time 7:20 to 7:21 or 7:19 to 7:21. Apply, it'll pull up the contracts from that time and you can go in and then you'll be going into the historical data, right? And let's just say that this was the red line down. It's like, oh, well, it's a sold put, but it looks like it could have closed out this position. They might have bought puts here and sold here, right? If this was red and this is green, maybe they sold the puts there and bought the puts to close, right? Just so you're not going to get all of the information just from this. There's going to be some questions that you have, but leveraging the unusual options, the historical, the options AI lets you understand why did this go? These puts were sold, but what are they trying to do? Like, is it a new position? Are they closing a position? Which will be very easy to find down here. That's it. That's all. Super simple. So that's the way that I've been using this, right? So I look for divergences. I look for, calls not following puts or puts not following calls or a massive spike on one. And then I just kind of go down, I drill into the information, I see if it's a new position, an old position, whatever, and then we act accordingly, right? This chart is real good because all you need to do is watch the lines. Like you don't even need to worry about what the data is for the most part until you see big moves on the lines. Like I don't care if it's together and whatever. Like I'm looking for like a giant spike up somewhere. See giant spike up, go figure out why, then make a move. And we have an SPX, SPXW unusual options. So I had people, and originally when I had the unusual options being posted, I wasn't adding everybody. SPX and SPXW, because the contract value is so expensive, would trigger a lot of those more often, and that was pissing people off a little bit. Um, so I don't know unless I'm